SCFI only increased by 19.48 points last week, an increase of 0.52%, indicating that the freight market may experience a turning point. The latest SCFI index released on July 12th fell 58.94 points to 3,674.86 points, ending the continuous rise. Among the four major routes, freight rates are different. The price of the U.S. Western route has dropped most significantly, with a drop of up to 5.5%. The market predicts that freight rates will continue to fall slowly throughout July, but will not fall sharply. Freight forwarding companies and shipping giants said that the market structure is undergoing significant changes, and the freight rate on the West U.S. route has gradually dropped to the level of $7,500. Some large freight forwarding companies can undertake business with a price of less than $7,000 through long-term contracts, indicating that market freight rates may fall even more sharply next week. The market is paying attention to whether freight rates will be adjusted, and many companies are waiting for new quotes from shipping companies. In addition, affected by tensions in the Red Sea region of the Middle East, European importers are purchasing in advance, which may lead to shipping chaos. Although freight rates are currently on an upward trend, demand has not yet reached peak levels, so there is a possibility that a pullback could occur at any time. Analysts noted that spot freight rates on key Asian routes will continue to rise, coinciding with record global shipping demand. It is expected that port congestion and equipment supply will have an impact on freight rates, and it is believed that demand will remain strong and there will be no fundamental changes this year.
Click on the home page or enter the URL. You will see more mechanical